Everyone is talking about the $1 million HDB flats, but almost nobody is talking about the bigger issue. The HDB market is slowing down. HDB resale prices fell 0.3% in Q2 2026 after dipping 0.1% in Q2 2026. This means that the market has seen 2 consecutive quarters of price decline. Resale transactions volume fell 10.2% year-on-year to 6,268 units compared to 6,981 units a year ago. On the other hand, private residential prices rose 0.5% in Q2 2026. And if you are a HDB owner thinking of upgrading to a condo, this may be one of the most important videos you need to watch. Because the question is no longer, can my HDB sell for profits? The real question is, if your HDB prices start to stagnate or come down, but private property prices continue to hold or increase at a more stable pace, will your upgrade gap become bigger and bigger? And that is the real danger, not that your HDB suddenly becomes worthless, but more of whether you missed the best window to move from an asset to the next. So let's find out in this video. Over the past few years, we have seen so many headlines about the $1 million HDB flats, record prices, record transaction, executive apartments crossing $1 million, mansionette crossing $1 million, prime location flats crossing 1.5 million. Familiar, right? I also had the privilege of breaking the record of $1.4 million in 2022, and at that point of time, we were interviewed by the Straits Times over here, where I shared my views that HDB prices will continue to move up for the next few years, and the reason was very clear. Singapore had just come out of COVID period, construction timeline delayed, supply was tight, demand remains strong, so naturally prices had room to move higher. To me, that wasn't speculation. It was based on real estate fundamentals. When supply is limited and demand is still healthy, prices tend to rise. It was just logical. And the market eventually reflected, and I was on the ground. Naturally, many HDB owners started to think, maybe my flat can also sell for a crazy high price, but here is the problem. $1 million HDB transaction usually represents the top segment of the market. They are often in a very specific location with very specific attributes. Things like high floor, good view, near MRT, mature estate, or even in limited supply. They do not always represent the average HDB flats. So if you are only looking at $1 million headlines, you may get the wrong impression that the entire HDB market is running hot. But on the ground, it can be very different because we are going for more viewings, fewer serious offers, more buyers comparing options, but we also do get a bit of low ballers. Buyers just trying their luck. This is where HDB owners need to pay attention. Let's look at a bigger picture because HDB price growth has slowed significantly from the strong post-COVID years, even though the $1 million transactions are always making headlines. It also points to the government's effort to stabilize the HDB market through cooling measures, the BTO supplies, and more upcoming MOP flats. This is very important because when the government increases the supply, it gives buyers more BTO options and more MOP flats entering the resale unit. Buyers naturally have more choices. But when buyers have more choices, urgency goes down. And when urgency goes down, the sellers lose pricing power. And that means instead of buyer asking how much valuation must I pay, they start to ask why should I pay the price when I have other options. And this part is very, very important. If you happen to be an owner of a low floor unit in a highly sought after $1 million enclave and you see transactions are mainly from the mid to high floor ones, you may want to pay close attention to how you price your unit. So let's say for example, the 15th floor is sold at 1.2 million. If you somehow is a second floor unit and your price is 1.1 million, to you as a seller, it may sound logical. However, you need to understand the buyer's profile in that estate. Their income is already at a bracket of at least 14,000. The difference in monthly installment between the 1.2 million property and a 1.1 million property is approximately $304 based on a 1.8% interest rate. Naturally, if they are already buying a $1 million flat, affordability is there. This decision could likely steer them towards the higher floor unit, hence This is the reason why million-dollar estates, you generally see the higher floor units selling faster. Now onto the private property market. Here's where it gets really interesting. Because the URA second quarter 2026 flash estimate shows that the overall private residential property price index increased by 0.5% quarter on quarter, slower than the 0.9% increase in first quarter 2026. But the details are very important because the non-landed private residential prices, which is condos, slipped 0.1%, CCR condos increased by 2%, RCR fell by 1.4% and OCR fell by 0.2%. But the key is landed property rose 2.6%. URA also highlighted that around 61,000 private residential units, including the ECs, are expected to be completed in the next few years. So what does this tell us? The private market has become more selective. Good assets can still hold, weak assets may struggle. But this is why the upgrade decision cannot be based on emotions. You cannot just say, I want a condo, right? You need to ask, am I actually moving from a slower asset into a stronger asset, or am I just taking on a bigger loan? Let me explain to you the upgrade gap using real life scenario. A client's HDB can sell for 1.1 million today. Sounds very good, right? But if the target condo is 2.2 million today, the gap is $1 million. Now imagine your HDB market slows down and your flat remains at 1.1 million or even softens slightly. But the condo that you want moves from 2.2 million to 2.3 million. Your upgrade gap just widened from 1 million to 1.1 million. You did not lose money on paper, but your next move becomes harder. And that's the part that many owners do not see. The risk is not just whether your HDB price drops, but the risk is whether the next property runs further away from you. Now let's go into the numbers. Assuming if you are selling your HDB and buying your first private property with no outstanding home loan. For a new private property purchase, you may borrow up to 75% of the property value or purchase price, whichever is lower, of course subject to your loan tenure. So for simple numbers, we use 75% loan, 25% down payment. But many upgraders forget this. Your cost is not just 25% down payment. You must include the buyer's stamp duty, the legal fees, renovation and emergency buffer. And also, buyer's stamp duty is taxed progressively. So let's take a look at the numbers. So if you base it on a 1.6% interest rate over 30 years loan tenure, if you're buying a 2.2 million condo, you're not just preparing for $500,000, but you're preparing for $632,600 before renovation and buffer. Your monthly installment is $5,774, and this is why upgrading cannot be based on feelings. It must be based on numbers. Can the sale proceeds from your HDB cover these $632,600 and potentially some renovation costs? And of course, before I move on, if you like what you've seen so far, please help to like, share and subscribe for more real estate content. So who should still consider upgrading? Group number one, of course, the HDB owners with strong sales proceeds. If after selling your HDB, refunding CPF, clearing your outstanding loan, you have enough for the down payment, stamp duties, and at least a 6 to 12 months of emergency funds, upgrading will still make a lot of sense now. Watch your timeline because overall supply of the MOP flats this year almost double that of last year. And group 2, owners whose HDB has limited future upsides. If your flat is older, your lease is running down, and your estate has a lot of competing supply, you need to ask whether your HDB can still outperform in the next 5 to 10 years. This is another topic which I'll share in my next video because the age of property is real. Group 3, families who need better long-term asset positioning. This means that you're not just upgrading for the lifestyle, but upgrading because you want a stronger exit demand, better rental flexibility, and a more future-proof asset. Always remember, HDB's aim is to provide quality and affordable housing. The fundamentals has always been to provide a roof for Singaporeans and is not for investments. My personal opinion, upgrading may not be for everyone. Don't upgrade if you need to wipe out all your CPF and cash just to buy. I've seen many clients do that, and yes, they manage to ride the property uptrend, but always have a safety net for the just in case moment. Do not upgrade if your new monthly installment makes you stressed every month. No point. When I do consultation, the first question I ask is not whether you're buying for own stay or investment, but I normally will ask, Why do you want to upgrade? And I have encountered a couple who ever told me that all their friends surrounding them are talking about it and they feel that they need to do the upgrade too. But after reviewing their finances with their income, they are able to do so. However, as they have 2 children, there are also other expenses. Upgrading to a condo comes with a cost to higher property tax, maintenance fee and other costs. Ultimately, they didn't buy. But 2 years after our conversation, they had a significant pay jump and we managed to buy into a bigger property with lesser stress as compared to what they were supposed to purchase previously when we discussed. So the goal here is to move safely from one asset to a stronger asset. A private property should improve your financial position, not trap you in a bigger liability. The key is to acquire the right asset while staying within a comfortable and sustainable financial position. So here is my simple framework I use with my clients. Step 1, protect your exit. Before you buy, ask who is my next buyer. Is it another upgrader, family, investors, or right sizers? If you cannot identify your future buyers, you better be careful. Step 2, protect your cash flow. Do not just ask whether the bank can lend you the money. Ask whether you can sleep well after paying your mortgage, maintenance fee, property tax, and other expenses, and you must have savings. Step number 3, protect your growth. Do not buy just because the show flat looks very nice. Look at the entry price, nearby supplies, layout efficiency, the demand, amenities, and transformation story. So asset selection matters more than ever. So is upgrading from a HDB to condo still worth in 2026? My answer is yes, but only if the numbers make sense, only if the property makes sense, and only if the move improves your long-term positioning. The HDB market is not crashing, but it's changing. More supplies are coming in, buyers have more choices, and the market is becoming more selective. So before you start viewing, make sure you know your numbers. Find out your estimated sales proceeds, CPF refund, how much loan you can take, and of course, whether you are comfortable with the monthly installment. So if you're a HDB owner and you're wondering whether to sell, hold, or upgrade, here is my number. I will send you my HDB upgrade checklist and see if it's a suitable time for you to do so. Because in 2026, the smartest move is not always to buy. The smarter move is knowing when to move, what to buy, and what to avoid. If not, I'll see you in my next video. Remember to like, share, and subscribe to help me with the YouTube algorithm so I can bring you more property content.